Hello, hello. I can't seem to get my audio working one more time. Oh, this is so sad. Let me check a few things. Hmm. One, two. No. One, two, one, two. One, two, one, two, one, two. One, two. I think I got it. Finally. Here we go. We're live. No more audio problems. Hello, everybody. Hello, Lorenzo. Yes, this is gonna happen. Third stream. I think it is a third stream in a row that we do that. We struggle to go live because audio problems appear. So I hate to say that, but I'm very bad at this in terms of fixing what is in front of me when I have audio problems. But we're here and we're doing it, and we are gonna do it. Thank you for being here. Thank you for passing by. Thank you for trusting me, if I can say, because this time we're not just going live, are we? We're going live to do something, because let me show you around. We have that balance. We have that deposit running. We are entering the markets with a goal. And the goal is quite simple for me. The goal is just to trade, to execute, to show you that building good habits and doing the things that you're supposed to do can bring you success. And it's so easy to achieve, and it's so not difficult to execute that I'm very excited to do that, because it's gonna be fun. It's gonna be fun for me, and I hope it's gonna be fun for you. So I very much hope you guys are doing good. I very much hope audio is good. I'm hearing myself, so it's good. Very much hope you guys are excited. Tiger, hello. I have something that we're gonna go through today, because I took a look this morning at your questions, and I was like, should I put it in writing or not? And I was like, let's just film it. Filming it is gonna be more fun. So we're gonna film the answers for you. And today's trading is looking very, very simple for me. I am expecting a high of the week for Tuesday. And not only we are getting these equal lows attacked on dollar index itself, we are looking for a possibility of Nasdaq hitting that order block out here. That's my weekly target in terms of buy side. I'm not interested in the price booking any higher prices than this, right? So what we're gonna be looking for, just like yesterday, we were looking for higher prices. Today, I'm saying it out loud, and I'm not gonna be interested in anything else. I'm gonna be looking for lower prices today, especially if dollar index stops going lower after that double bottom is attacked. Okay, so euro, I am expecting higher prices. I talked about in the weekly outlook. We're gonna go through the weekly outlook itself, but I'm not excited to trade forex up until CPI hits the market, right? So we have to realize those two conditions, which is, let's go one by one, which is we're looking for lower prices for the week itself, right? We want this to crash. We want this to crash. If the crash is not happening, when do we know that it's the truth and only truth? Huh? We will know that only and if we're gonna start closing on daily basis above the daily imbalance right here, and this volume imbalance is not gonna hold in the price right here. Well, two things to note, right? And with that in mind, we're diving deeper. We're pushing higher without any retracement, kinda, right? Nothing that we're interested in, or nothing that we can work with, because we're looking for a possibility to enter short. One is the real shorting possibility coming in front of us. Once this hourly imbalance that I'm noting right now gets broken to the downside. All right, so I'm gonna be watching that. We have liquidity resting above on ES. Do we have anything else to work with? You see a trend line right here? This trend line won't hold. I give you my pinky. This trend line won't hold, man. Okay, order block push to the upside. We bought this push to the upside yesterday. Felt good, felt great. Nasdaq now, nothing to my real interest. Few things that I'm gonna know. So I'm gonna get rid of this, and let's see what other lines are. Yeah, and this is an old new week opening gap. So let's put it to current interval and below. I'm not rushing it. The markets are open, but I have a set of rules that I'm gonna work with. I'm gonna work only with models that I'm teaching you guys. Majority of the models that I'm teaching you guys are starting from 10 a.m. So we have half an hour, 28 minutes to go till 10 a.m. hits. Right? So we're not interested in what is happening out here, right here. Okay? If you are, please be my guest. Go trade it. Go use it. Go fail, if I can say that. Sounds interesting, doesn't it? But yeah. So what do we have? Have bunches of sell side resting below. Lots of it, right? Lots of it. Pam, 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 pam. Look how many times we tried to go through that. Huh? What else am I watching? What else is there that I like? Similar situation here on ES, right? Very, very similar. So I'm taking a note of that. And let's take a note here. Sell side resting above again. And sell side resting below here on NQ. Okay? Is this something we can work with? Not yet, okay? Keep in mind, not yet. Because we're just pushing higher now. Let's see now. 1 minute chart. Maybe before we do that, five minutes, okay? Let's check out the 5 minutes chart. No SMTs, higher highs of both charts, kind of a trend line growing out, right? Anything we can work with? Pum pum, 9 a.m. open. I like this double bottom on ES. So what I'm gonna note, you see, I'm only noting sell stops. Right away, I said out loud that my interest is lower prices. That's what I'm noting. I'm not interested in anything else. So I'm noting lower prices for myself. This is an hourly imbalance plus an order block. Sell side resting below, right? So we'll see. We'll see if we can find a way to work with. Market opens up. Push to the downside. That's cool. So, what I'm missing also. I'm missing the new day opening gap. So, allow me to find it. Here we go. New day opening gap here on ES. And I need one on the NQ. And we're gonna go fix my chart. So I would see only what I need. And we're gonna evaluate what is happening. Right? What have we done so far and what are we doing right now during the market open? We're already looking to break the structure. U2 2020-22 panning out on NQ, so if we get this offered, oh, this would be a rough trade if we take this and already. I'm watching it. I'm not taking anything yet. If I'm gonna take anything, guys, you're gonna see it right on the screen immediately. Okay? So let's go through the day on 5 minutes chart real quick. We open up, right? Both markets. We open up. Smooth push to the upside. Smooth. You see? Smoothness like this is engineered. This is handmade, man-made. Okay? Bump, push to the downside during the London session, right? Reasonable, totally. What do we do right after 7 o'clock? New York starts, bomb sell side. Bomb sell side as well. We're happy to see that. We're happy to work with it, aren't we? Push to the upside, which is cool. YouTube 2022 possibly offered here. Not really, which is alright also. And we're kind of creating a new trend line, and this is where the news came in. 8:30. SMTs, right? Another sell side liquidity pool. I like this one even better because it was created during the news. And now we're just working that order block, punching it, touching it, working through it, right? I'll just put down a few notes for myself to take a look at. And let's see. So far, everything is so far so good for me to look for lower prices. What we're gonna try to do during the live streams here, we're gonna kind of look for a one shot, one kill trades where we don't spend too much time. Hello, Gus. Hi. Where we don't spend too much time in the trade itself, because small account that we're gonna run, which 5K is a very incredibly small account that we're gonna play around with. It's gonna make very, very difficult to kind of manage drawdown, manage any losing positions. So we're very much gonna try, do our best to avoid those. Okay? And with that in mind, I'm very much gonna focus on NASDAQ less compared to the S&P 500. S&P 500 is gonna be my interest, especially in the first 2 or 3 weeks of trading. Okay, because very simply, it is moving a lot less. It is a lot less volatile. It hurts less when you make a mistake as well. Okay. Because a mistake on ES is gonna be what, 200, 250 in terms of a dollar value. And Nasdaq usually a mistake there is 300, 400, almost double. You know, we gotta stay true to ourselves. We're doing it to run up the account, not to fool around. Yep. Oh. What are we talking about today? We're talking about the market that we're looking to go lower because we just hit our weekly target in terms of higher prices. Okay? And because of that, I'm gonna do something. So, we're gonna go and review a few things, okay? Because I don't know. I think we shouldn't trade before the session starts, because that's what I constantly talk about. Don't trade before the session starts. Do it only during the kill zone. Yada yada. You know? I'm always constantly talking about things that in my opinion should save you from losing money. So, in a way I should stick to it. I should stick to what I talk about, to what I give you. Right? Sometimes it is difficult. I won't lie. You know? Sometimes it is difficult to do that. Let's see. Camera is moving around a little bit, isn't it? But so far so good. So far so good. Market opened up. Market is manipulating, keyword here, manipulating to the upside, which we're gonna see how we can work. Okay? I hope we can. I hope we can find a way of working with it. We don't, it's fine. So far, nothing. Right? 2 minutes. Imbalance right here. Let's note that. Fair value gap. And again, looking for lower prices. That's my interest. And not only that, I'm looking for the market to be very risky, incredibly risky, and incredibly, what's a good word for it? Not good enough for us to trade, because CPI is coming into the market tomorrow. And what do we know about CPI? We know for a fact that nothing good is gonna happen. First thing first, isn't it? Isn't that true? Second thing, what we know about the CPI release itself, that the market before releasing has to accumulate. So that's what we're expecting. We're not expecting good prices today. We're expecting a little bit of weird moves, a little bit of unexpected moves. Okay? That's my expectation for the day. So, with that in mind, let's talk. Let's talk weekly outlook a little bit. We're looking at SMTs here at the top, but we'll see. I'm not too keen just yet. Not too keen just yet. Okay. When I become keen on trading this, oh, we're gonna get to it immediately. Okay. But what I'm keen about is talking about the weekly outlook itself. Here we go. Let me do this. Window capture. Get rid of window capture. And you know what I will introduce? I will introduce my whole display. Okay. Source. Yes. LG monitor. Here we go. Transform. Here we go. Beautiful, isn't it? Huh? Beautiful. Here we go. I want to talk about this a little bit. Right? And I want to talk about it because usually, not usually, pretty much always, statistically even, always, what we do here pans out. And because it does, I want to go through it. And this week, even though yesterday was a pretty awesome trading day itself, we were looking for the market to be pretty bad for us in terms of what was delivered. Because tomorrow is CPI itself, and we're not interested to trade the CPI, right? The majority of the risk is going towards Thursday and Friday for me, at least. And when I say that, that's what I do. I'm keeping my risk to a minimum right now, right? Treasury bonds, I'll skip. Nasdaq, I skip. Because I'll show you. Not a lot of movement has happened so far. So if we take a look at what we called for on dollar, we called for this kind of this daily fair value gap to hold in the price. That's happening. We're pushing lower, but I'm not yet too keen on this being a top. CPI can run through this with ease, unexpectedly in a way. Oh wow. But we're still staying careful here. Euro target was hit, buy side is taken, we're pushing higher, totally reasonable. Pound, this is what I called for. Even though I wrote that it is a 50-50, I'm watching buy stops resting above. Take a look at this 4-hour chart. I'm watching for buy side to be hit. I couldn't find an entry, unfortunately, but so far so good. Like so far, amazingly good. Watch 28,399. That's my target, and I very much think we're gonna get there very soon. Okay, but what we called for is let's go to Nasdaq. That will be the best. So I'm looking at Nasdaq, and I targeted this order block initially. Kind of said, what's the day of? Where is it? July 31st, last day of July order block. This green upside candle, and I'm watching it right now, and basically everything below 50% of it, which is 19,250-ish, is gonna be bearish for me. I'm not gonna be looking for the market to go any higher up until the point that this is broken. Okay, so far so good. We're pushing higher. Monday, Tuesday trading higher. Order block right now is found. I'm gonna look for a possibility for the market to top out here. Okay, and that's what we called for in the weekly outlook. I want the market to top here for the order block to kind of be respected, and for market to crash. Look how much sell side is resting below these lows. 17,338.75. Okay, so closing my analysis from the weekend off, and we're kind of just jumping back into it straight away. Okay? And we're gonna try to look for lower prices today together with you. I think it's gonna be fun. I think it's gonna be cool. Okay. Yeah. Again, 5 minutes. Again, camera falling. Sorry about that. Sell side resting below on 5 minutes. Order block being not at all respected, but we have to realize that the order block is coming from the daily chart, and we're just looking at the 5 minutes here. 3 minutes. 2. Let's note this. 2 minutes chart. 1. Question, please. Go ahead, sir. Go ahead. Which feeds are you using for forex pairs? What do you mean when you say feed? Because it depends what are you trading. If you're looking to trade CFDs, very hard to measure then, because every single CFD is kind of the broker based, right? They make up their own market in a way. Yeah. But if you're looking to trade futures, just write the euro in TradingView and right here 6E DME data. DME Charlie Mike Echo These charts, no, these are not my charts. So on futures, I'm basically using E-mini S&P contract. It's from Trade.it. And when I do my real analysis, I kind of do my analysis on futures only. Because we have to understand the fact that CFDs are fully manipulated. CFDs, for example, Euro versus USD contract, that is something that is derived from the futures contract. And it's literally contract for difference. So they derive the price. They created themselves. Okay? CFD contract for difference, Tiger. It's a synthetic, in a way, fake market that we've created so people like us could trade euro against dollar. Because there's no such thing against euro as versus dollar contract, right? Please, what's the source? Oh yeah, of course, Euro USD. I did my markups on, what is it? What's the source here? How do I check it? Forex.com. Forex.com, man. Awanda, I don't really like because Awanda gives a lot of gaps. The guys have seen my screenshot before, like when sometimes you would wake up and you would have a wick through half of your monitor on Euro USD and you would be like, what? So how did that happen? But Awanda I don't like because of that reason. Otherwise, I as you saw, I did my drawings on that other place, whatever the name was. Euro USD forex.com. It doesn't really matter where you do your analysis, as long as you do majority of it on the euro. For example, if you're trading Euro USD on your brokerage, broker is name X, I don't know, Pepperstone, right? I like Pepperstone. So if you're trading Euro USD on Pepperstone, you should be doing your analysis on Euro futures, because that is the most representable security, least manipulated one, in a way, you know, because you get the real product when you look at the Euro futures contract. Euro versus dollar is a fake synthetic contract for difference, you know? So don't trust what you see there too much. You can see higher highs, lower lows that are not even real, you know? Well, we're getting our first inversion of the stream. Let's check risk reward. Quite alright. Quite alright, isn't it? Yeah, by CME. So the symbol is like 6E, something like that. Euro futures 6E, Euro FX futures CME. Yeah. Do your analysis there. That's gonna be the best for you, man. So we're getting that inversion offered, and we're not gonna participate in it until it retraces. If it retraces good enough, well enough, it's gonna be our first trade. But without a retracement, I can't. And like entering from here where we are at right now, like what are you gonna do with 30 handle stop loss? You know? Makes it difficult, very difficult. Priority for me very much to keep this account in a good state is gonna be trading time versus price. Trusting time a lot more than I trust the price itself. You know? We're gonna put the order here. Because that come on, it didn't tag us. You for real? Are you for real? We're gonna have to get it manual, sadly. So yeah, it's gonna be a little bit difficult initially, right? Up until the point that we double up the account, let's say. It's gonna be a little bit difficult trading it. Because, and I have 2 minutes to stay on this, so let me explain what I wanted to say, and we're gonna back to the trade. It's gonna be difficult up until the point that we get to around 10k, because at 10k losing to 50, who cares? 2.5% loss. Now 5%, 6, almost 10 sometimes. That's way too difficult to handle, you know? So just staying reasonable. That's what we're gonna do. So what I'm watching right now, I'm watching for this 5 minute to get inverted. Placing it like this, so I know what I'm looking at. I need the next minute, not this, but the upcoming minute to close below. For the 5 minute inversion to kind of get offered. If that doesn't happen, I'm out. I'm not interested in being in this. Okay. Two, yeah. First trade is gonna be a bet one, which is alright. Don't really mind. Bomb right here. Consequent encroachment. Thus, we're still holding on to this. Let me do the executions. There you go. So consequent encroachment still holding, and we have 20 more seconds to go lower. If in those 20 seconds we manage to close below 54.15, I'm happy with this. Because we have an SMT here at the top. I'm very happy I didn't place a trade on Nasdaq. And this SMT at the top is what we're gonna have to trust. Session starting. We didn't get what we want. Let me do a checkup again. 1 minute. Version still working, so we're gonna trust this order while holding in the price. Yeah. As soon as 1 minute chart closes above it, I'm out. Not gonna be in then. And then we're gonna give ourselves a second opportunity. Very, very simple. And now we're gonna have a little bit of conversation because Tiger asked about risk management, right? It's gonna be a fun topic to discuss. And I'm not, so you have to realize 9:55. Take a look here. 9:55. You would be thinking, oh, inversion. We should be going long. Yeah? If that's your model, if that's your bias, please go ahead. I'm not saying no to that. But I have no interest in price booking any higher. I want to see it crash. I want to see it book lower. That's my bias, so I'm sticking to it. Yeah? I hope it sounds reasonable, it sounds explainable. At least. Yeah? Another SMT here on NQ. 1 minute into the session also. I might be wrong. Like, then this is the beauty of trading. Statistically, I know that everything we're gonna do here is gonna be good. Statistically, keyword. We're gonna have our mistakes. We're gonna have periods of when we make bad decisions, wrong decisions, but we're gonna talk about it in a second when this trade starts running. How to say about how I manage the risk and why I kind of trust the fact of making this possible and making this happen. Double bottom below here. Push to the... We can go even lower, but I'm not gonna be interested. Not on this small account, you know? I'm not gonna be interested in that. So, yeah. And then the setup is very, very simple to go over it, right? We're looking for lower prices on a daily chart because we have a double bottom on both indices. We see this manipulation to the upside during the session since 7 in the morning, which is a very key time because New York session started at 7 in the morning, started pushing higher. Bam, 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 right? I like that. I like manipulation because market accumulates, manipulates, and we participate in distribution. If you want to know more about it, ask or just pass by Discord. Sounds funny, but you know. Next upcoming few months, I'm here to trade. So I'm gonna do that. And when we know that this is the manipulation stage, not only because sell side gets allocated below, but we want to see lower prices as well because higher time frame analysis gives us that opportunity. We look for the market to start crashing. We look for inversions or YouTube 2022 setups. Here we get both. Thomas, I don't know if you're in the stream, but I think possibly that you're in the short also, because we have a fair value gap right here that got inverted, right? We closed right below it. And not only that, we took out buy stops here and we created a break of structure down below this. Put it here. PMS. Yeah. With a fair value gap bomb entry YouTube 2022. Missed sadly. Too bad. Too bad. Yeah, that's what I'm trading now. 1 minute inversion into a YouTube 2022. Two models that I'm gonna constantly, till you get bored, till you say, I'm vomiting off this, I don't want to hear it anymore. Two models that I think are the best for you, a newcomer, in front of the chart, you know? When you don't have much experience, the two best models, inversions and YouTube 2022. We have a combination of those two here. Thus we're in a position. Okay? And we're looking, 5 minutes inversion panned out. I'm gonna move my stop loss to 5 handles just to play it safe. 18.5 because I don't want the price coming back up there anymore. I think we're good. We're starting the challenge. The challenge is very, very strong. I'm happy with this. Good start is half of the job done, right? How's that saying? We in Lithuania, we love those old people talk remarks, you know? Good start, half of the job done. Hooray! But now you're gonna see how I manage my risk a lot, right? Because a lot of the previous streams, we would be in trades where I would kind of let them go. I would kind of say, okay, I don't really care. Now, every single breath of this market, if you have a possibility of taking a partial, you should be taking that partial off now. Okay? Please do. If you have an option to do it, take a partial off. Please. Pretty please. Okay? You're not gonna? You do you. Okay? You should be taking something off here right now. Okay? Immediate rebalance. So no fair value gap opening. 5-minute inversion still there. What are we gonna do next? So this is gonna be the most difficult part of me trading this account initially. Let me explain again. On paper, I should be taking a partial off here. Because every single time I'm gonna enter a position, I'm gonna look for 5 handles. 5 handles God-given was offered, right? And not only 5 handles was offered, we took out sell stops resting below. Double bottom right here. Wow, taken out. Market can start running higher now, easily. Easily. So what I'm gonna do? I hate the fact that I'm gonna have to do it, but I'm possibly gonna move my stop loss towards break even. Possibly, keyword. But this is what you should be doing. You should be taking a partial off and you should be going break even. Not to overdo it. And that's what I'm gonna have to do. I'm breaking. Okay. Out. Too bad. But I gotta play this safe. Too bad. I really wanted this position. It was a very good position for us. Especially to begin the account. To get this going. We lost $3. Oh no. $3. Jokes aside. It's fine. But you see, very incredibly good close on my end. Because just like we took out those sell stops, what did I say? Sell side taken, partial should be off. Why? Because the market can start running higher. Guess what we just got? Being smart. That's how smart I am, but no. Jokes aside. Hope you benefited from this. These were 10 very active minutes for me, okay? Hypothetical question. Not now, but if ES offers a long and you jump into it and the NQ offers a long too, should you jump into a long in NQ as well or only say ES? So, read your question again and think about it. Why the hell do you need 2 trades on 2 different markets? Just pick a market that you like better and open a double position there. Like, there's no need to trade the both markets. If you want to double up your risk, trade not 1 contract, but open 2 contracts instead. I don't know. Weird question, man. Okay? Weird question. But no. Immediately I say no. And I think we're gonna get to that sell side resting below without us, which is just too bad. So now, watch this. We have a volume imbalance that just got broken. Watch that. I'm not entering, sadly. Because I can't. Too risky. Very simply. But this might allow the market to push lower from where it is trading at right now. Okay? Watch that closely. Yeah, this is nice. Too bad. Too bad because I have to manage the risk incredibly well on this account. Like, insanely well. Otherwise, we don't have any chances of succeeding in this, you know? In a way, too bad that I have to do it, but at the same time, I think you guys are gonna learn shitloads from this. Because I can promise you, nobody else in this market manages the risk like I do. I'm at Let me take a look at my numbers. I'm at 38% gains with 2.4% drawdown at right now this year. Over 30% gains with less than 2.5% drawdown. Tell me who can do it better. At the same time, I wanted to talk about risk management. So Tiger left us a very nice comment in the Discord community, right? And he kind of left us with 3 questions that we're gonna go through. So, what is the best way to manage the risk on a funded account? He said. And so my opinion is gonna be difficult. Because in my opinion, let's say that you have a 50k account, right? If you have that 50k account, what is your drawdown usually? Let me do some texting so it looks 50k account prop firm, right? If you have that 50k account, your drawdown usually is what? 1500? 2k, 2000. Okay, leave it be. Make it 2.5. I don't care. Percentage wise, that is what? 1% of 50k is 500. 5% drawdown. Best thing to do to manage your risk in a proper way. My bad. Best thing you can do to manage your risk in a proper way is to realize the fact that you're not working with a 50k account. You're working with a 2.5k account, man. And if you want to have your account healthy, you should be looking to manage your risk as if it is a 2.5k account. How many trades can you lose to blow 2.5k using one contract? 3? 4? What is it? Just a few, right? So what do you have to do immediately when you get your funded account? You're opening not E-mini Nasdaq, you're opening up not E-mini S&P, you're opening micro E-mini. You're looking to trade micros and micros only. You're never getting to a full contract here. Because when you open a trade with a full contract, you see what I wrote? If you're looking to trade a full contract, you have 10 trades after the account is gone. And that is never gonna be true because you're gonna risk more, you're gonna fool around. So basically, in reality, I'll be honest, 5 trades. Show me anybody that you know that has never lost more than 5 trades in a row. If you know anybody that has never lost 5 trades in a row, that guy is... Get me in touch with him ASAP, please. Alright? That's not possible. So, you have to understand the fact that if you're trading a 50k account as if it's a 50k that you have, and you're opening full-on contracts like this, you're fooling yourself. Because it's not possible, because after 5 trades of you fooling around, you're gonna lose that account. Very, very simple. Okay? So first rule, how to manage risk. Understand that you're playing with 2.5k drawdown, so manage the account as if it is a 2.5k account. I don't give a fuck how much money you make. Because you're not making any if you can't realize the fact that you're playing with a 2.5k account. Okay? Second thing. Save this if you want to. Please do. Save this. Second thing that you have to realize is that, but Ignas, you just opened a 5K account and now you're opening full-on contracts. You wanna guess why? Because I've never lost more than 7 trades in a row trading futures. 7. If I lose 7 trades of $250, that is a statistical anomaly. That's an outlier. And when you're saying, Ignas, why are you trading full contracts? Because I can. Because I know that statistically, I'm never getting to a spot that this account gets burnt. If I stick to my plan, if I stick to the set of rules that I have. Okay? So just making that clear. But how to manage the rules, the risk elsewise. As a third example, as a second, okay, second. So one is realizing that you're playing not with a 50K account. You're playing with a 2.5K account in a way. Okay? Second is knowing your stats. If you know, just like me, that I've never lost more than 7 trades trading futures before, managing my account accordingly, immediately. And I just missed a trade. No, I didn't. Not yet. Okay. I thought I missed a trade. I'm making a pause on my rent because I'm gonna be looking to enter this. Well, if this inverts, we're in. Double checking. There we go. We're in. Again, what have I done here? I'm using a model that I know that works for me. And if we get fucked here, I'm gonna be very much annoyed. Very. But it is what it is. Putting a 20 handles stop loss now. I'm afraid of this wicking. I'm very afraid of this wicking. So I'm not placing my stop loss yet. Why? See this right here. 3 up close candles. 2, 2, 2. 10, 10, 10, 12. That's a one big ass order block. Right here. One big ass order block, right? We can push through this. We can wick through this with ease. But I think that if I'm right with this trade, 50% level of this holds. Okay? Because I think that this order block holds. I'm not setting my stop loss yet because it can wick to this 15 times before going lower. Okay? Just like we're doing it right now. You see? Anger. Wicking through it, body's still in there. I like body staying below order block. If not below order block, below that inversion itself. Because right now it's a balanced price range. We're not interested in any higher prices. If we're gonna get given higher prices, like I'm a big failure then. I'm saying it out loud, okay? So apologies for the pause on the rant about how to manage your risk, but I have to be focused now. Sorry about that. I like the fact that we're looking to close. We haven't yet. We have a volume imbalance here. I like the fact and the possibility of us closing below it. We haven't yet, right? Keep that in mind. I would love to see that happening though. Yeah. And this idea fails only if we go above this 50% level. Do we realize why the market is so tough on us right now? What did we talk about when we started the stream itself? What did we talk about when we started the live stream? Talked about CPI being released later tomorrow. Later this week, meaning tomorrow, right? This is exactly the reason why the market is shit. You see? Another week. I'm very happy. This is a very bad example from me, but I'm happy I'm not putting a stop loss. But we just closed below that volume imbalance. Now stop loss becomes a little bit more reasonable. Right? This volume imbalance, we just closed below it. There's a very big chance that we start looking to go lower now. Yeah? Let's see. Inversion holding, order block holding, right? Nothing here is random. So far, so good. And I want this to run away. Ooh, tough. Very tough. Let's check. 5 minutes, 4 minutes, 3, 2. 2 minutes. It's killing me. Again, not closing. This is my set of rules. 50%. If we close above it, I'm out. You see that I have to stay focused, you know? Feels bad when I have to say that this focus in front of you guys. And nothing above 5. This is where my stop loss is going right now. Buy up here, and I'm not gonna hold on to this anymore. Because you see how that 50% level is still holding in. Just like expected. Order block is not a random candle formation. Something that algo reacts to. It's something that algo always comes back to. It uses it always, constantly, massively, you know? Alright? I'm not happy with what I'm showing you here though. You shouldn't be doing anything like this. But we're gonna stick to this. What I was talking, risk management. Yeah. So first, realizing that you're not working with that K account. You're working with only 2.5K account itself. Because that's your drawdown. Because that's what you're offered to work with. You don't have much more. Right? Second, knowing your stats. Knowing that you have a model that works or doesn't work. Doesn't really matter if it works or not, but knowing the stats behind it, knowing that, just like me, I'm not gonna lose 7 trades in a row. With this, I'm putting myself in a very rough and hard situation, because this being a loser, just like now, puts me in an incredibly difficult situation, because I can't lose more than what my stats give me. My stats give me 7 losers. Now I lost twice on paper, in a way, right? I have 5 positions to go, in a way. Makes it more difficult on myself, which is cool. Makes it even more fun. But I had the third thing that I wanted to say about managing risk is what we've done with US 500 right here. When you open a normal lot size, which is not a full E-mini but is a micro contract, just checking if everything in copy trader is good. Copy trader is good. We're good, good, good. We're good. When you open a position that is, let's say, 2 micros, 3 micros, 5, even 9 micros, just don't trade the full on contract. You enter a trade and you take off partials. You have to pay the trade. ICT always says pay the trader. You have to pay yourself. Allow yourself to take something off away from the market. Move the stop loss to break even as soon as you can. How to do it? Best case scenario, 5 handles, good enough. NQ, 20 handles, good enough. You're not looking to make more because you can't. Literally, you can't. Take those 5 handles, take something off. $5, doesn't matter. Take something off away from the market. Be profitable, you know? Put your stop loss break even, just like we did here. Bam, you're good. You don't have to be right to be profitable. That's one of the best sayings that I've heard before. So, best way to manage risk on a funded account, just don't fucking fool around. Listen to what I just had to say, okay? How much at best should you be risking in a trade to be profitable with a funded account? I think it comes back to what we just talked about a lot, right? It comes back to it because should be risking more than what you're given. So if you have 2,500 in terms of risk, you shouldn't be risking more than 4% per trade. $20, $30. The less you can allow yourself to risk, the more chances you have to succeed. Because the less risk, the more times you can fail. Very, very simple. The less, the better. I usually risk 5 handles on ES. Whatever the lot size is, I just make it very, very real for myself. Risk is always the same, you know? So I do that. Sometimes it works, sometimes it doesn't, as you see, right? But at the same time, I know the market is going lower. That's the fun part about this. I know for certain, I know as a fact that the market is going lower. Funny when I say that, but makes it hard to find ways of working with it. But going through a period of drawdown just like we did, that's the most difficult thing about trading. Because now we would be in a profit, and a very nice profit now. Yeah? 5-minute chart is just fucking us over in a way. But yeah, you shouldn't be risking more than 5 handles. Shouldn't be risking more than what you can trade with on that funded account itself. Huh? Stay away from this. We're gonna get to those sell side liquidity pools taken though. We're gonna do that. One more chance. Are we gonna do it? We're gonna still have a shorting opportunity, to be fair. We will. We just inverted that 5. No, we haven't inverted that 5 minutes yet. And, we're getting there. I'm saying it for 15th time already. All you have to do is find a good entry position for that. But Tiger left us with a third question. How to act when you get stopped out with your model? Like, should you wait a bit of time for more information to confirmation your bias and then re-enter, or should you stop trading the day in general? And on one contract holding to 5395 risk free. Good fucking job, man. Hold it till 5393.5. Make it better for yourself. Hold it even longer. But nice. Nice entry, man. Good work. Good work. Good job. After losing a trade, basically, Tiger asked whether he should be looking to enter a second one right away. Answer is very simple. No. In my opinion, best thing you can do for yourself is to put yourself in situations where you have zero emotions coming into the market. After a loss, immediately, you putting in a trade, majority of the times is going to result in you taking a trade that has emotion next to it. Emotion and entry, never, ever, ever, never are two things that you want to align yourself with. Huh? I'm not entering this. Not yet. Keyword, yet. So the answer to that is very, very simple. You should never be looking to enter a trade again after you took a loser. Not worth it, simply. Not worth it, because you're gonna be putting yourself into a place where you put emotion into it. You're gonna be aligning yourself with emotions. I'm very keen on taking this. So we're gonna take it off as soon as this fails, okay? This is gonna be the last trade for us. And I felt something. I was not happy with what we had here. I was very much not happy with this. I literally didn't push a button again, because I knew I'm gonna push it because of that emotion. What you should be looking now for is for this to get inverted. We want this fair value gap, 1034, to get inverted. What I'm doing here is a YouTube 2022 trade, simply. Just trusting the model, which is YouTube 2022, and just waiting for the trade to pan out and for this fair value gap kind of not to get annihilated. So I don't want it to close above. If it closes above, I'm out. I'm done. I'm not interested in this no more. Okay? Oh, too bad. This trade didn't copy. Ah. Oh, too bad. I'm looking now. Why I'm taking this off? Interesting day. Why I'm taking this off? Because my copy trading engine just failed on me. And that is just That is nothing you're happy with. That is nothing you want to work with. Too bad. But what have we done today so far? Very, very simply. We took a very nice trade here on ES. We managed the risk well. Managed the risk very well, actually. Incredibly well, right? But the market condition is just literally not good enough. We're looking at CPI to come into the marketplace tomorrow, Wednesday, 8:30. We're not interested to see anything good happening in the market because of that, right? We're not. So what you should be doing, you should be playing a little bit of a waiting game. Allow the market to do its work and to trade it afterwards. Why I'm saying this? Because we have to realize so what do we have to realize, right? I can't allow you guys to put yourselves into situations where you, just like I said to Tiger, where you allow emotions to take better of you. I lost 2 positions now in a row. Do I care? I kinda do, but does it influence me? Is anything bad gonna happen because of that? No. Answer is very, very simple. No. Because on paper, I know that this is a stat. Those were okay. Not the best trades because CPI is coming through tomorrow. But I'm just pushing the button as if it would be my model. Okay? This is a high enough probability condition. Why? Because we have that SMT at the top. I'm trusting that SMT. I'm allowing kind of that SMT to run the market through for us. Okay? We're sadly not getting that. Too bad. Oh yeah. It is what it is. We wait it out. Huh? But at the same time, so this is another topic that we constantly talk with the guys about, is that you have to allow that gambler to show up from time to time. You can't just be there kind of waiting for a position and not taking a trade for 10 days in a row. You have to allow yourself, your gambler, inner gambler, to open the trade. Because you have to put down risk to make something on top of it, you know? Sounds reasonable for me. But yeah. Is this a long entry though? That's what I'm asking myself now. For me it's not, because I won't open any more trades now. No thank you. We fooled the alarm enough. Yeah? I won't do that. Yeah. We're gonna wait for the market to do its job. Take a look at the PM session itself. So, because this is a model as well. Sell side taken, 3 drives, many drives pattern in a way. Bam, inversion from 5 minutes, optimal trade entry. Did you hear what I just said? Buy stops resting right above, because they are. But we're not taking this because the bias is for the market to go lower. We're interested in lower prices, lower price delivery. I'm just kind of skimming through this, evaluating what I've done. Just kind of looking to align myself with it. So, and every time I take a loser, question is for myself to be asked. Very, very simple. Would I do that again? Yes. Starting with the first trade of the day. Bam, here. U2 2022 into an inversion. Partial should have been taken. This is the worst that we had. Had no possibilities of taking a partial. And we didn't take one, and we got stopped at break even. And then I went on a streak for looking for another shorting possibility because of that. You see? I'm talking aloud where I caught myself. I know for a fact that we're gonna run style stops. I know for a fact that this is holding, this is an entry model, but I can't work with that. Because in a way I'm fooling around with way too small of an account. Huh? NQ. SMT at the top into inversion. This is a model that I will take any time of the day. This is a model that I will take during NFP, after NFP, before NFP. Doesn't matter what kind of day of the week is. Doesn't matter whether it's Christmas or not. SMT into inversion works for about 65 to 70% of the time for me. If I have a clear drawn liquidity. We have a clean drawn liquidity. Sell side is, sorry. Sell side is resting below. Okay. So this one right here, 100%. I'm taking it again and again and again. I don't care. This right here, this is where we fuck up. This should not have been taken. And I'm being that honest. That third position should not have been taken by me. Alright? And I hope you appreciate that fact. Me being honest with you. Right? So what are we watching? I'm gonna wait for 15 minutes to get broken. On NQ. Not gonna touch it. Elsewise. Same here. I'm gonna wait for this 15 minutes to get broken. Not gonna touch it elsewise. 5. This is all together. This is cool. So I can take this off. We want the price to go below this. NQ is looking a little bit different though, so but it's fine. So we're gonna focus on trading ES if we trade today, right? And this, I'm just gonna hide it because it hurt us good enough already, right? Yep. This is gonna be it from me today. I'm gonna put it in a very, how to say, very simple way for you guys. I'm not looking for higher prices. I'm looking for lower prices. So doesn't matter how, when, or where we invert this 15 minutes, but I'm gonna be interested in looking for a short only and if then this 15 minutes inversion happens. Prior to that fact, not interested. So with that in mind, I very much hope you enjoyed. I very much hope you learned from this. I'm doing this so you guys can learn from this. I'm not doing it for myself. Trust me when I say that. I'm doing it so you can learn, so you can find it insightful. I'm doing it so you realize what is it that we talk on Discord in reality as well. Okay? So with that in mind, I'm gonna wish you good luck, good trading, and stay safe. Bye.